Okay, how you doing, guys? I'm going to teach you guys how to scalp and day trade. I am Aristotle. DM me to contact. My Instagram is Aristotle_investments. So, the first thing is the key things to look for. Volume, breaks of either support or resistance, broken support turn resistance, and broken resistance turn support. Staying within your trend lines, taking profits at each pivot point level, Bollinger Band squeeze. These are the strategies I use throughout the day for my day trading techniques. So let's get right into it. Volume. Volume is the number of contracts traded. It doesn't tell you how many people are buying or selling, but it does tell you that there are more buyers than sellers or sellers than buyers by analyzing volume levels. We'll kind of discuss that right after this. Volume goes hand in hand with candles. So what I mean is if you see a red candle, you're going to see selling pressure to match that red candle. If you see a green candle, you're going to see buying pressure to match that green candle. Volume indicates selling and buying pressure. Breaks of support or resistance. Support is a level of lows. Resistance is a level of highs. Breaks of support means that prices will go down. Breaks of resistance means that prices will go up. Volume during breakouts determine the significance of the continuation. A volume spike is good confirmation. I'm going to show you examples right after this. All right, check this out. So, bam. Breaks of resistance. So, right here, we have a resistance, right? Because resistance is a series of highs. So, notice that as it broke out of resistance, it has rising volume. Volume is measured by these levels down here. And notice that on the first break of resistance, that rise in volume had a significant impact on the trends ahead. So, bam, you see a level of resistance right here. And then you see a breakout. And then you see another level of resistance right here. And then you see a breakout. And notice that during this breakout, with this rising volume to match, it signified the strength of the uptrend. So bam, we got a great uptrend going on. So that's pretty much the gist of breaks of resistance. Breaks of resistance accompanied by rising volume equals a strong uptrend or a strong breakout. Okay. Now, breaks of support. Let's get into it. So, notice right here is our support line, and then it broke out right here, right? So, when it broke our support line, you seen a significant downtrend, right? And you see some rising volume right here, but not really a spike during the uptrend. So that means the strength of the uptrend is not really valid. As you can see, the strength of the downtrend, my fault. The strength of the downtrend is not really valid. So, as you can see, proven point, no rising or volume spike, or not a significant volume spike, equals not really a good downtrend ahead. Plus, you would do a put option during breaks of support and do a call option of breaks of resistance. So let's get right into it. So this is important. Broken support turn resistance. This means that after prices convincingly break support, which is your series of lows, that means that line now becomes your new resistance and can also act as a stop loss. Broken resistance turns support. This means that after prices convincingly break resistance, that line becomes your new support and can also act as a stop loss. So let's get right into it. Bam. I kind of put this all out for you guys. So this yellow line is our support line, right? And when it broke support right here, right? Notice that it wasn't accompanied by, well, it was accompanied by rising volume, but not a significant spike. So that signified low strength of a downtrend. Now notice it tested the new resistance. So when it broke support, that line now becomes resistance, and it tested resistance right here, right? So bam, it kind of hit and then dropped back down. So I would do a put option at that moment. And here's the important part. It's called price action and how to know when to get out of a trade because it's going to uptrend. So notice this candle right here, this red candle, right? So I put a stop loss line right above that red candle. So that tells me that I need to get out of the trend. So I use the 5-minute candles, as you can see. And I like to use those because they're perfect. They're just right. Now, when you're using, candles and everything that's going on, there's not going to be this perfect time frame, this perfect pattern, but you will find ones that suit you and your trading style or whatnot. And 5-minute candles are the best, candles that I like to use. They're just right. Some people like to use the 1 minute. Some people like to use the 15-minute. I stick with 5-minute candles for the most part. So, bam. When it broke above that last bearish red candle, that told me to get out of the trade, So, bam, I made money all right here and took my profits right about here. Not too bad, probably a good $200 made right there. And, theoretically, you want to catch this, but that's not really realistic. You're never going to catch 100% of anything. And so, as our support line continues, right, we're still keeping that same support line. We have a break above the new resistance. Well, our support line turned resistance. We have a break above the new resistance with rising volume. So notice when it broke above that new resistance, right, it was accompanied by rising volume. And then bam, it strengthened the uptrend. Things are, very simple. So, staying in an uptrend. It's not very hard to stay in an uptrend. You draw your trend line and you literally stay within your trend. Wrong thing. You stay within your trend until it breaks away. So it broke out of the trend right about there and then started trading sideways right there. It's pretty simple. And this is called your support line. So when you're staying within the uptrend, you want to stay within your support line and take profits right about here. So you literally gain all of that, right? And you're still using breaks of resistance as you go. And it couldn't break resistance right there, so you got out right here. Pretty simple. All right. Staying in a downtrend. Also simple. So now, remember, series of highs are your resistance. So when you're staying within a downtrend, you want to stay in until it breaks your resistance line. And when it broke that resistance line, well, it really wasn't accompanied by rising volume during the breakout. But, that's how you stay within your downtrend. So you would have made all this money right here with a put option by staying within your trend line. Okay, pivot points. This is important. These are very helpful. They have since I've been using them, about a good 75 to 85% accuracy rate, which I find very useful because it's hard to get something that works this well. And, it's kind of taboo. Like, I pretty much started a trend of using pivot points, and it's catching on throughout the market. A lot of people like to use it now. Don't get me wrong, I'm not the first to use it, but it's becoming popular within the investing community because of me. So, pivot points. In financial markets, pivot points is a price level that is used by traders as a possible indicator of market movement. A pivot point is calculated as an average of significant prices, high, low, close from the performance of a market in a prior trading period. So, bam. Right? So this is how I use pivot points. So what it's saying is, you see P, right? What it's saying is your resistance 1 level, resistance 2 level, support 1 level, support 2 level, they are all based on the averages of yesterday's high, low, and close prices. So they use those to pretty much come up with a pivot line for the following day. So what happens is, if prices break above this pivot line, right, I'm expecting them to go right here. And I'm going to take profits at R1, right? And I'm going to wait for it to break R1. And if it does successfully break R1, I'm going to do a call option and stay within the pivot line. Now, I personally like to take profits halfway and then re-enter and then take profits again right there. And if I know that it's going to R1, like without a shadow of a doubt, I like to unload. I'll do 10 contracts. And then, this right here can turn to $300 easily with 10 contracts and a call option. But, that's just me. I know when something's going to hit with confidence, and that's just how I roll. So, if you're not very confident, I recommend doing 1 contract at a time until you get very confident in the price movements of pivot points. And right here, like I said, you always want to take profits halfway to that point. It started trading sideways, and then it broke that resistance line right here and caught a nice spike at the end of the trading period. Bollinger Band squeezes. Now, it's something new that I use, but I love it. So Bollinger Band squeeze occurs when volatility falls to low levels and the Bollinger Band narrows. According to John Bollinger, whatever that guy is, periods of low volatility are often followed by periods of high volatility. Therefore, a volatility contraction or narrowing of the Bollinger Bands can foreshadow a significant advance or decline. Now, I found a trick to this because they say you really can't tell where it's going, but I found something that works a good 90% of the time. It's all about being right most of the time because you can't be right 100% of the time in the stock market, but the best thing to do is be right most of the time. So, this is a great example, and this just happened today. So, notice how the Bollinger Bands contract right here and right here, right? Now, during this contraction, the dominant trend was the downtrend, right? So it went down. Because and notice, so when a Bollinger Band contracts, that equals low volatility. So low volatility is usually when prices are kind of trading sideways and not really going anywhere. So notice how prices traded sideways and then the Bollinger Band squeezed and then bam, went down. And then notice this squeeze too. But the dominant trend was an uptrend within that squeeze, so it broke up. And the dominant trend was a downtrend within this squeeze, so it broke down. That's the trick that I found to, trading or whatnot. And that's just how it goes. And, I still use my pivot point. So if I was to stay within this trend when it broke support right here, I would take profits right here, re-enter, take profits halfway right here, re-enter, take profits again. And then bam, I'm out. And that's a good $400 made probably based on how I trade. So, those are just tricks and trades that I use, and I hope you guys enjoyed this video. Good night.